Something massive just happened. While the world is distracted, Canada has just done something that could change global geopolitics forever. In a move that has shocked many and raised alarm bells among policymakers, Canada has quietly opened a new backdoor for China, creating an oil trade route that could shake up the global energy market. But what does this really mean? Is Canada strengthening its economic future, or is this a dangerous game that could have unintended consequences? Stay with me until the end of this video because what we're about to reveal will open your eyes to the hidden forces shaping global energy and power dynamics. For years, Canada has been one of the top oil producers in the world. With vast reserves of crude oil, particularly from Alberta's oil sands, the country has relied heavily on exports to the United States. But now, things are changing. Canada has been seeking ways to diversify its oil exports beyond the United States, and recent developments suggest that a new pathway has quietly been set in motion, a route that bypasses traditional pipelines and taps directly into China's growing demand for oil. So why now? What's pushing Canada to make this move? The answer lies in a combination of economic necessity, political shifts, and global market trends. First, let's talk about the US-Canada energy relationship. For decades, Canada has heavily depended on the US as its primary oil buyer, but strained relations, regulatory roadblocks, and the cancellation of major pipeline projects like Keystone XL have forced Canada to look elsewhere. And then there's China, the world's second-largest oil consumer. With its insatiable demand for energy, China has been aggressively securing oil supplies worldwide. And with tensions rising between China and the US, China is looking for reliable partners who can supply them with the oil they need. But here's where things get even more interesting. Sources indicate that behind closed doors, negotiations have been taking place to streamline oil shipments from Canada's west coast to China. Some say this could be a game-changing opportunity for Canada's economy, but others warn that it could be a backdoor deal that exposes Canada to long-term geopolitical risks. This shift in trade patterns is already happening. Data shows that Chinese imports of Canadian crude oil have been rising steadily, and experts predict this trend will only accelerate. But what are the risks? For one, environmental concerns. With increased tanker traffic through ecologically sensitive waters, environmental groups fear a catastrophic spill that could devastate marine life and coastal communities. Then there's national security. Some analysts argue that deepening economic ties with China could put Canada in a vulnerable position. If tensions escalate between Western nations and China, could Canada find itself caught in the crossfire? Economically, this deal could be a double-edged sword. On one hand, increased exports to China could boost Canada's economy, creating jobs and increasing government revenues. But on the other hand, over-reliance on one major buyer could lead to long-term instability. If China decides to leverage its economic influence, Canada could face significant challenges. Some experts warn that Beijing's track record of using economic pressure to achieve political goals is a risk that cannot be ignored. But Canada isn't the only one paying attention to this deal. The United States, which has historically been Canada's biggest oil customer, is watching this development closely. If Canada continues shifting its exports toward China, could this impact US-Canada relations? Other countries, including Australia and Japan, are also re-evaluating their positions in the global energy market. Will this new trade route prompt shifts in alliances and trade agreements worldwide? As the world moves toward renewable energy, how long can Canada rely on oil exports? With China investing heavily in green energy alternatives, could this trade route be a short-term solution that leaves Canada behind in the long run? Or is this a strategic play that will keep Canada relevant in global energy markets? As Canada strengthens its trade ties with China, how will this impact global economic power structures? Could Canada become too reliant on China, risking its own economic independence? With emerging energy alternatives, could this oil deal be short-lived, or will it define Canada's future in the global energy market? Canada is at a crossroads. While its rich oil reserves have long been the backbone of its economy, global energy trends are shifting. Renewable energy sources like solar, wind, and hydrogen are gaining momentum, and many nations are investing heavily in green technology. What does this mean for Canada? Will the country continue to prioritize oil exports, or will it embrace the transition to clean energy? Some experts argue that maintaining a strong oil trade with China could provide the revenue needed to fund green energy initiatives. Others warn that by doubling down on oil, Canada risks being left behind in a world that is rapidly moving towards sustainability. One of the biggest criticisms of Canada's oil industry is its environmental impact. Extracting oil from Alberta's oil sands is a resource-intensive process, producing significant carbon emissions. With international pressure mounting to reduce carbon footprints, Canada faces a difficult choice. Should it continue exporting oil to China at the risk of worsening its environmental reputation? Or should it invest in cleaner alternatives, even if that means sacrificing short-term economic gains? Environmental activists argue that Canada must take decisive action to cut emissions, while industry leaders maintain that the nation cannot afford to abandon its most valuable natural resource. China's interest in Canada's oil goes beyond simple energy needs. By securing a stable oil supply, China strengthens its position as a global economic superpower. The deal allows China to diversify its energy sources, reducing its reliance on politically volatile regions like the Middle East. Moreover, some experts believe that China's long-term strategy is to exert greater influence over Canada's economy. By deepening trade ties, Beijing gains leverage that could be used in future negotiations on trade, technology, and even national security issues. The question is, how much influence is Canada willing to concede? Political leaders across the world are weighing in on Canada's new oil route. In Washington, policymakers express concerns that Canada is shifting away from its traditional alliance with the United States. European nations meanwhile view this development as part of a broader trend of China expanding its economic reach. Domestically, reactions are mixed. Some Canadian politicians argue that the deal is essential for economic growth, while others worry about the long-term implications of aligning too closely with China. With public opinion divided, this issue is sure to shape Canada's political landscape for years to come. With Canada shifting its focus to China, what does this mean for the rest of the world? The global energy landscape is changing fast, and this new trade route is bound to send ripples across international relations. Countries like the United States, Russia, and Saudi Arabia are all watching closely. The US may see this as a strategic loss, while Russia, another key oil supplier to China, could view Canada as a new competitor in the market. European nations striving for energy independence are also reacting. Will they see Canada's move as an opportunity to strengthen their own energy alliances, or will it further drive them toward renewables? The balance of power in global energy politics is shifting, and Canada's decision to embrace China could reshape international alliances for decades. Beyond the grand geopolitical implications, let's talk about what this means for everyday Canadians. Will this trade route lead to economic prosperity, or could it backfire? On the positive side, increased oil exports could mean more jobs, higher wages in the energy sector, and boosted government revenues that could fund social programs, infrastructure, and public services. But there are risks too. If Canada becomes too dependent on China, it could face economic instability if China ever decides to cut imports or impose trade restrictions. Additionally, rising fuel prices, environmental concerns, and potential pushback from indigenous communities may complicate this deal. For the average citizen, this shift could impact everything from the price of gas to employment opportunities. Will Canada emerge stronger, or will this deal bring unforeseen challenges? As Canada steps onto a new path in global energy trade, the consequences will unfold in the coming years. Will this be the beginning of a powerful economic alliance, or a decision that Canada may regret? One thing is certain, this move is redefining the country's role in the world. Whether this deal will lead to prosperity or problems, only time will tell. What do you think? Is this trade route a smart move for Canada, or does it pose too many risks? Let us know your thoughts in the comments below.